Oil has approached the level of $90 per barrel and even jumped above the $91 mark at some point. There are currently no signs of a pullback. Given the recent news, the likelihood of a price correction has significantly decreased. Oil is now trading near a 10-month high. In the course of a bullish run, Brent oil futures jumped above the threshold of $90 per barrel and then slightly retreated. To continue the upward trend, the quote needs to settle firmly above the $90 mark. In the commodities market, the possibility of oil being traded in the yuan raises serious concerns. Historically, oil has been predominantly priced in the US dollars. The parallel use of these two different currencies will inevitably result in varied prices, plunging markets into chaos. The shift hasn't happened yet, but the recent data indicating the yuan's increasing share in crude settlements is an alarming sign for market participants. The primary concern for many institutional investors, especially from Europe and the United States, is the risk of not being able to purchase the required amount of oil in the US dollars. If so, they will have to look for options using the yuan. Such prospects are pushing oil prices higher. Meanwhile, gold dipped below $1,930 per troy ounce. Yesterday, gold traders rushed to sell the asset, which resulted in a drop of 0.65% in the gold value. If this downtrend persists, the price could decline to as low as $1,900 per troy ounce. To perform an upward scenario, gold must first rebound beyond the mark of 1,940. It's hard to explain the current decline in the gold prices. Recent inflation data from the Eurozone, particularly the Producer Price Index, suggested that the European Central Bank might increase interest rates, but at a more gradual pace than intended. Besides, the Federal Reserve Bank of San Francisco released a study stating that the current high interest rates could have negative implications for the economy for another decade. Again, this is another hint at a potential pause in interest rate hikes, which in theory should favor a rise in gold prices. Apparently, large market players do not take this seriously, at least in the short term. Therefore, gold is likely to stay under pressure until the upcoming meetings of the European Central Bank and the Federal Open Market Committee. As for the Russian ruble, the situation basically remains the same, and the US dollar continues to advance. The recent moves by the Central Bank and the Ministry of Finance suggested that the authorities are likely to intervene to prevent the ruble from falling to 200 against the greenback. Should the dollar's rise continue, the Bank of Russia is poised to take emergency measures to offer the ruble some temporary respite. Yet these actions have so far been insufficient to reverse the weakening of the ruble. Parallel to the foreign exchange market, the Russian stock market is hovering around its local highs, showing resilience against a potential correction. Recent surges in index values were notably rapid and were perceived as undergrounded by some market experts. However, to counterbalance this, the market might enter an extended phase of a sideways movement. Such a perspective is again in traction, making this scenario increasingly probable. And that's all for now. We continue to follow developments in the financial markets. Subscribe to our channel and follow the news with us. And see you soon!